So any idea? Back to the screen. Các bạn nào có idea không ạ? Nào đây. Um, the point is right because the yield curve provides a relationship between cost and time to maturity. Yes. It points out the maturity and the yield. Yeah, the time to maturity and the yield. Upward in here, they mention about the upward sloping yield curve. Upward. So the point is right. Here you mentioned about the preference of the investor, of the borrower, about the maturity of the loans. If there is an upward sloping yield curve, so the borrower in the point sizing, the borrower will prefer the series of the short-term loans rather than the long-term loans. And they can use the rollover facility to convert or to match the desired maturity. Many short-term loans roll over to the long-term loans because believe that the short-term loan, they expect an upward sloping yield curve. The short-term loan will be lower than the long-term loans, right? Long-term interest rate, prefer short-term. But in the counterpoint, they say the risk about the interest rate movement, and they prefer the locking in the long-term interest rate rather than the series of the short-term rate. Borrower will tend to be affected by the trend of the curve and at the point mentioned, pursue short-term loans. Okay, so you are at for the point. Yield curve, upward sloping yield curve. Influence. So the yield curve influence. Yeah, affect. Influence. Yield curve in this case is an upward sloping yield curve. Influence. The determinant here is the borrower prefer maturity of a loan. So maturity may be short term or maybe long term. Okay, so yield curve, no downward in here, just an upward sloping. How the upward sloping yield curve affect to the borrower prefer maturity of the loans. Do they prefer short term or the long term? The point say short term, but the counterpoint say long term. Okay, long term, and here is series of the short term, and here is a long term. The one idea. is for the point, mean short term. In the point, say the short term. So let's say you need the fund for 3 years or 5 years. Take a sample of 5 years. You need the funding for 5 years. So I have 2 options. The first option, you issue the bond with the maturity 5 years, and you lock them out into, right, the rate of the long term. Number 2, you have the option to, let's say, invest for 1 year. 1, 2, 3, 4, and 5. Not really year, but could be 10. Let's take a sample of commercial paper. 6 months commercial paper. So for 5 years, you issue 10 commercial paper, 6 months. Commercial paper, 6 months. It means that after the first commercial paper expired, you will reissue. You reissue here. Mean you roll over another commercial paper with the identical maturity, but different identical maturity every 6 months. Okay. But of course, a different interest, different rate, because the market rate change. So 10 commercial paper, okay, to meet with the 5-year loans demand, or 1 5-year bond to lock themselves in the long-term rate. But here, you will face with the variable or change in the interest rate every 6 months. It is a rollover. You reissue, rollover. Okay. You revolving credit. You extend the line. You extend the maturity. So one say the point. Remember, the shape of your curve affected by demand and supply and expectation of the interest rate. Okay. And the yield curve is used to determine the market expectation of the future interest rate. Remember that? So any other idea? The others, what do you think? Any one you favor for the counterpoint? Anyone? Anyone favor counterpoint? We can select the point, right? So if you are the borrower, you need fund in the long term. Let's say you need fund in long term. So which options you select? A long term or the series of the short term? The long term is for the counterpoint, and series of the short term is for the point. Okay. or the point. You can enjoy, you can have the fun with the short-term interest rate lower here, but you have to face with the interest rate risk, the change of the interest rate risk, okay? With the expectation interest rate will increase in the future. Say that. I believe your curve reflects future interest rate. So what happens if you believe the yield curve will reflect future interest rate? The counterpoint will be true. The solution say, right? Now, so actually the sum each point, each answer, the point and counterpoint have some validity, but depends on the expectation or the explanation. So I have to say that not a true or false answer here. Each answer had some validity, okay? If in this is say if you believed the yield curve will reflect future interest rate, will provide some will forecast, right, the future interest rate. So you favor for counterpoint. Doesn't mean the point will be wrong. Doesn't mean that. Okay. The yield curve show upward trend, so borrower tend to borrow in long-term loan to get lower interest rate than the future. Yeah. So the key point here will be the based on the market expectations, right? So you have the good point. If you believed the yield curve will reflect, will provide a reasonable forecast of future interest rate, with the expectation that interest rate will increase. Okay, interest rate will increase. Now, in counterpoint, the borrower will face with the uncertainty regarding the interest rate charged on the subsequent loans are needed. So they face with uncertainty. Upward sloping interest rate may rise in the future and cost of borrowing will increase. Reason why? They will prefer locking themselves on the long-term rate rather than the series of the short-term rate and will be increased. So if you believe that the yield curve, upward sloping yield curve, reflect the future interest rate or forecast reasonably future interest rate, you favor more on the counterpoint, or the counterpoint have more validity. Okay, but if you believe or you don't think the yield curve reflect or provide a reasonable forecast of the future interest rate, so you may prefer the point rather than the counterpoint. So there is no correct or wrong answer here. Okay, actually it depends or if here, if you believe the yield curve provide reasonable forecast of the future interest rate, you believe or the market expectation is correct, upward sloping yield curve, so it's better for borrower for selecting the long-term loans rather than the series of the short-term loans here by year, rather than the series of the 6 months commercial paper or a 5 1 month out 5 1 year, sorry, 5 1 year notes for some or notes. Okay, 1 year. So you have the 5 1 year notes or 10 6 month CP. You face with the uncertainty of the changing interest rate. With the expectation interest rate will increase. Okay, interest rate risk here. Are you okay with that? Any questions? So let me know. Okay, so for counterpoint, it's a kind of the debate, you know. So we have the two side point and counterpoint. The point have some validity, some point correct, some idea is correct, but the counterpoint is the same. Some idea correct. We don't have the totally correct or wrong answer here. Okay. Very difficult. Okay. To decide totally correct or totally wrong. So we can use the internet. You can search more about the issue. You're finding more the supporting evidence for the point counterpoint. If you feel it's not enough, okay, you're still confused. So find out more information about that. Okay with that? Now we come to the flows of fund exercise. Again, the Carson company. You recall that influence of the structure of interest rate. Recall that Carson company has obtained substantial loans from finance company and commercial bank. The interest rate on the loans is tied to 6-month treasury bill and includes a risk premium and will be adjusted every 6 months. Okay, they obtain the loan from this lender here, but interest rate on the loans adjusted every 6 months. So I have the idea of variable interest rate structure. It will be based on the referenced interest rate or market interest rate. In this case, treasury bill, 6 months, and plus some margin, you know, or the premium here. Margin or premium means some point or some percentage. Okay, premium or the margin here, it reflects the additional risk of the Carson company compared with the risk-free rate here. It's risk-free rate, and it is a margin. Okay, variable rate every 6 months. We have the two factors in this case, variable or the reference or market indicator rate change, and even the premium or margin may change. It depends on the riskiness, like credit rating, default risk premium, maturity risk premium, maybe not this one, but liquidity risk premium, okay, inflation, something like that. Okay, so here maybe change, and treasury bill 6 months change, may change. Therefore, Carson cost of obtaining fund is sensitive to interest rate movement. The company expect that the U.S. economy will strengthen. Expect economy will strengthen. So it plans to grow in future by expanding a business and by making acquisition. So growing merger acquisition. Carson anticipates needing long-term financing to pay for growth and plan to borrow additional funds, either through loans or by issuing bonds, considering issue to stock to raise funds. Okay, here about the interest rate structure and the planned funding needs of the company. Now, question 8. Assume that the market expectations for the economy are similar to Carson expectations. The economy will strengthen. Also assume that the yield curve is primarily influenced by interest rate expectations. would the yield curve be upward sloping or downward sloping? And why? The two assumptions. And as a result, okay, if we assume, so what happened to the yield curve? So anyone? Rising economy and yield curve primarily influenced by interest rate expectation. We have the expectation of interest rate. What happened? If they expect the rising economy, so what happened? What about the interest rate expectation? And as a result, what is the shape of the yield curve? Okay, so this saying interest rate will increase. Yep. Rising economy, normal expectation, popular expectations, right? Rising interest rate. And because they assume the shape of yield curve primarily influenced by the interest rate expectation. Yeah, higher interest rate. Interest rate will increase because of rising economy here and normal situation. Yes, Lizon. If interest rate will increase, so we have the upward sloping. Rising interest rate. And also, you remember, because the firm need the funding for the long term. Yep. Loans or issuing bond or the stock. So for the Carson company, you need to act up the effect of the liquidity, okay? Liquidity effect or liquidity premium. Actually, we have the expectation and the liquidity premium theory because the firm obtain the fund long-term financing, debt securities or the stock, longer maturity, we have the higher rates, okay? So higher return here, higher interest rate and higher liquidity premium here. Upward sloping, okay? Higher rates for longer term maturity because of firm raise long-term financing, okay? Need long-term financing. Okay, question B. If Carson could obtain more debt financing for 10 years project, would it prefer to obtain credit at a long-term fixed interest rate or the floating rate, and why? Currently, firm obtain a floating rate, okay, interest rate on the loans here. Floating rate. So if the firm need debt financing for 10 years, they prefer the fixed term or the floating fixed interest rate or floating interest rate, and why? Come back with the point questions, right? The same idea with the point questions. Reason do you think the continue floating rate? If you expect assumption here, rising interest rate, what happened? The interest rate on loan will be increased over time, right? Because the market interest rate increase. So here, market interest rate increase. So have the market interest rate increase. So interest rate on loans will increase over time. Even the prevailing interest rate will be lower on loans than the bonds, right? But if the market interest rate increase, so interest rate on loans will be increased over time. So do you think the cousin may be willing to lock in the long-term debt by issuing bond 10 year? Or they accept or they prefer the floating rate loans and subject to the uncertainty? So cousin here issue 10-year bond. Of course, the prevailing interest rate will be lower on the loan than the 10-year bond, but the expectation here, 10-year bond, or they have the short term and floating rate note, floating rate, like Treasury bill, 6 months, some premium. They issue like commercial paper or the CD or something like that, the security with the interest rate. Okay. So what about the others? What do you think? So do you prefer a 10-year? You lock, right? Lock the interest rate. And here, uncertainty. Because this interest rate change, right? Increased. Market interest rate increase. So the total here will increase also. So one, they prefer 10-year bond. They prefer one 10-year bond. What about the others? If they obtain a floating rate, like what they do, right? Currently, they have to face with the uncertainty of the higher interest rate. Not the moving, but higher interest rate because the expectation higher. But if they accept a higher cost right now, but they can lock in 10 years, okay, maturity. So everyone agree with a 10-year bond? Any other idea? Lee Jun still continue the floating rate or 10-year bond? Now, let's say for the 10-year bond here, of course, it equal the risk-free rate. Okay, we have the 10-year bonds. We have the key factor as the risk-free rate on 10-year bonds. Okay, 10-year bond here is corporate bond. We need to base on the risk-free rate here, RF. Okay, it is a 10-year Treasury bond. Is that true? Plus with some risk premium. The risk premium with the possibility of like a default risk premium. Okay. Liquidity risk premium. Any adjustment regarding the here for the credit rating, liquidity adjustment of the tax or special filter of the bond for the filter of the bond, right? It is a structure of the yield 10-year bond. Okay, risk-free. You based on the treasury bond and risk premium. That's all. And if they prefer the short term here, it based on the treasury bill 6 months and the some premium margin and 6 month change. Maybe in this case increase over time. Yep, the structure. So agree that with the friend, the Đức say prefer 10 year. Agree with the friend. If you have any other idea, so let me know in the chat box or raise a voice. So I think in this case, the firm Carson are willing to lock themselves into the long-term rate 10-year bonds rather than faced with the uncertainty of the rising, changing, but actually rising the interest rate for every 6 months. Okay. So it's about the flows of fund exercise, influence of the interest rate to the selecting the maturity. Here is a borrower. You can have the other situation of the investor, right? Carson company, they are issuer or the borrower, and we so we have the counterpoint questions with the from the standpoint of the borrower, right? The borrower. Okay, so I think enough for the chapter number 3. So now we move to chapter number 17 about commercial bank point counterpoint. Need to move here. Okay, so we have the point counterpoint of chapter number 17. Should bank engage in other financial services beside banking? The beside banking here is the traditional banking or the core banking services. Deposit taking and providing credit. Okay. Here we have some summary for the source of fund for commercial bank, the use of fund for commercial bank, use of fund here, sources of fund here, and beside bank engage in off balance sheet activity. We have the loan commitment, standby letter of the credit, forward contract, and a swap contract. Okay. So loan commitment, we have the term, forgot, but over withdrawal, you know, over withdrawal. So the questions, and we have the point, say no. Banks should focus on what they do best. And counterpoint say yes. Banks should increase their value by engaging in other services. They can appeal to customers who want to have all the financial services provided by one financial institution. So we have the financial conglomerate, including the traditional banking services, securities operations, including the sale and trading, investment banking services, and so on. Financial conglomerate. What do you think? Yes or no? Banks just do what they do best. Okay, receiving the deposit and making loans. Think about the bank services in Vietnam right now. You go to bank not for saving money, or not only for having some loans, right? The bank now provide many, diversified services. To diversify the sources of funding, I agree with the counterpoint. Not a kind of sources of funding. Sources of funding. Yes. What do you mean? What do you mean by diversify the sources of funding? You agree with the counterpoint. Banks should increase or diversify or have more services. But what happened to a diversify of sources of funding, Huyền? And Trọng Đức also agree with the counterpoint, favor counterpoint. More important than the answer, you express the idea or the opinions on that answer. Okay, you agree, firms should increase the value by engaging in other services. They offer more services, financial services to the customer. Counterpoint, like insurance company, they don't say banks should pursue other services as more active flows of money enhance the status of the economy. Okay. You have example of the insurance company, but actually, can you tell me more about the example? Why do you think about the insurance company? And how it's related to the bank here? Active flow of money. Good point. Active flows of money are actually the income stream, right? They diversify the income sources. So remember about the term interest income and non-interest income. Is that true? Interest income just solely basing on a traditional services. Interest rate spread between the saving rate and the lending rate, the profit, right? Traditional banking activity. Hello? Anyone want to say something? Okay, the win say answer engage in other enhance competitive ability. Okay. expands a bit market share, customer segment, retail segment, risks in further safe credit growth, saving time, isn't true? Convenient for customer who want help. Okay. So you have to point, they need to expand the market share, expand the customer base, enhance the competitive advantage, and okay, convince will be serve more the customer. You could obtain more fund through some other services are provided to the customer. Obtain fund. Có bạn nào bật mic muốn nói gì à? Không nhìn thấy list đâu đây. Anyone to turn on the mic? If you want to say something, you can turn on the mic. Ở đây sao mọi người thấy được cái tên này, số hết rồi đây à? Okay, totally agree with the Huyền point. No, just still be confused with Huyền point because you say diversify the sources of funding and then more details, obtain more funds through other services provided to the customer. Other services, obtain more funds, obtain. If you convert it into kind of income stream or the income sources, maybe more, clearer, right? Rather than the obtain the fund. Bank gain profit and expand the role in the long term, serve more service for customer, especially for patrons. Okay. I think all of you have the correct point. All of you. More important is you can take a sample, like Lizun, you take a sample of the insurance company, but you need to make it clearer. You make it relevant, okay, in the answer. Let's say you can take a sample of a specific like a particular bank in Vietnam, okay? Let's say you take a sample of Techcombank in Vietnam, okay? Or you take a big force like Vietcombank, BIDV, Agribank, okay? And one more, Vietinbank, right? Okay? State-owned commercial bank in Vietnam. But if you want to take a sample, so let's say you use a Techcombank as an example. So Techcombank, of course, they provide the traditional banking, right? Traditional banking, providing loans, receive the saving. But now they diversify. It is an interest income, you know. But the bank trying to diversify the income to the non-interest income. I say that? They diversify the services. So traditional banking, and maybe like you take a sample of our balance sheet services, or the other services. You may use the other terms. You log in the website of the Techcombank and look for some services, additional services offer. Okay. Let's say that. So anyone can find out more information. And as a result, they can increase the market share. They expand the customer base, is a network. They can earn some more fees or the incomes, not only realize on the interest, but a non-interest income. Insurance, example here, in Lizun, insurance here. You know the term like banca assurance, banca assurance. Now, if you go to the bank office or bank representative, so the banker will ask you, let's say you have 100 million. You go to the bank office. You go to the creditor and you say, I want to save that money in short term, like 1 month or 3 months or 1 year. Let's say 1 year saving. 1 year saving. Example. Let's say that is you prefer 1 year saving and you lock into the interest rate, could be around 6%, around 6.5% per year. Okay, balloons payment. But the banker will, let's say, suggest you will spend around 50 million for the savings and another 50 million you could buy, or let's say 20 millions, you buy an insurance policy. Okay, 50 millions you pay on the savings and another 30 millions you make an other investment. Okay, or 50-50 means they try to suggest you the other alternatives, not only saving money, but also insurance policy all the time, right? So very attractive income, like a bonds rate greater than the saving rate. Okay, and you can diversify the investment. If you have the money like more 100 million, they offer you, Techcombank will offer you, they have the like the advisory services. If you are the VIP or you have the money, advisory services. You have the 1 billion, for example, so they diversify in the bond, they offer you the bonds investment. Okay, they invite you to invest in some fund unit with the promised return over 10% return rather than the 6.5%. They offer you some insurance policy. So many here, services here. It means that the banker now, they try to suggest you the more services rather than the saving money. Reopen it. Then take a sample, okay, if you want. And also the bank, they acquire other type of institutions to expand the services, okay, rather than to provide the services by themselves. The bank can acquire other financial institutions. Okay. But remember that the bank must, okay, do the core business very well first before expanding or diversifying the business in the other, okay, extended services. If the bank pay too much money for the other services, it is good if the additional service is beneficial, but it's not good if the services incur the excessive cost. Okay, so they can diversify, yes, to serve, right, appeal the customer who want all the financial services. Yeah, services, not the traditional, but the off-balance sheet, insurance, investment advisory services, For corporate sector, they offer the letter of the credit or the loan commitment to other services. But they need to maintain the core business, to operate the core business well. They can diversify the additional services if the services beneficial rather than the cost. Okay. It seems to be that everyone agree with the counterpoint, favor counterpoint. Is that true? We give an example in the letter. You have the example of our balance sheet here. Loan commitment, standby letter of the credit. And here they receive the interest rate and the fee. Fee here. Fees income. Fees or premium as an income, right? Swap contract here. Fees. It is a non-interest income. But it is a commitment. It is agreement. The banks can expose them to the more risk, higher risk here. The bank take the risk by the commitment to receive the fee. So again, with the off-balance sheet, for the normal situation, off-balance sheet will generate the income, our profit. And the income and profit will be recorded out of the balance sheet. Is that true? But for the worst case scenario, the off-balance sheet, the expense of off-balance sheet will be recorded on the balance sheet. Okay? Remember off-balance sheet. Off-balance sheet. Normal, right? Situation. Like letter of credit, LC, take a sample of standby letter of the credit. If the clients of the bank can pay or settle the contract, the bank earns the fee. And the fees or income will be recorded on out of balance sheet. Recorded out of balance sheet. But for what's okay situation, if the clients of the bank default, so bank have to pay. Bank is obligated to pay or settle contract. So the expenses here now will be recorded on balance sheet. Okay. It is from the what contingent liability. Okay. So bank must do what the core business first. They do well, maintain the core business first. They focus on core business and to make sure that the additional services will bring the benefit, generate benefit rather than a loss. Okay, excessive cost. You get a higher risk. Okay. So you can express the idea in their own way, in their own words. Doesn't matter. Just give me the point. And with the supporting ideas, with the example, interpretation of the theory or the issue, if it's related to the questions. Okay with that? Or you okay with that? Any questions so far? So in these questions, we favor more for counterpoint. They can, right? If those services generate the profit rather than the excessive cost by exposing or taking more risk. Okay, risk involved. So point counterpoint. Trọng Đức say yes. What about the other? Lee Jun or Huyền or the other express the idea here? Okay with that? Thanh Huyền, if you give the more obtain more funds here is not the correct words. Even though you have the correct point, but it's not correct words. Okay, incomes rather than the funds. Fund you mentioned about the source of fund. Okay. Now we have another questions. We have a not the long questions here. Maybe flows of fund exercise. Services provided by financial conglomerates. So Cass & Company is attempting to compare the services offered by different banks. Others would like to have all services provided by one bank. Explain the different types of services provided by a financial institution may allow Cass & Company to obtain funds or to hedge the risk. So the key word here is a financial conglomerate. In the lecture number 1, right, you have the diagram, the structure of the financial conglomerates. So we have the banks, and the banks we have the security company, we have the finance company, we have the mutual fund. So example like Vietcombank, right? They have the VCB, Vietcombank, they have the banks, they have the security company, VCBS. All commercial bank have the security company, right? And then we have the mutual fund. They have signed the contract with the insurance company. We have the banca assurance. So nowadays we have the full package of services in one bank. Okay. So have a look on the mobile banking. You will have the app of mobile banking. You can see many services offered, right, by the bank. So in case of the corporate clients, Cass & Company, they can use the services of financial conglomerate to raise the funds, obtain funds by issue bond, issue bonds, what else? Stock, loans, obtain the loans. So the issue bond means the Cass & Company can issue bond to the banks, to the conglomerate. Okay. Or they ask a bank or underwriting, bank or security firms or investment banking fund firm of the bank to act as an underwriter for issuing bond or stock, okay, or providing loans, or the brokerage services for trading the security, or the derivative, okay, derivatives, trading derivative, okay, many services here. Have the risk by the derivative. Obtain fund by issuing bond, stock, and loans to the bank, to the conglomerate, or use the services at the underwriting facility. Okay. So underwriting and the loan services for the rating fund and the derivative to hedge the risk. Okay, flows of fund. I think it's enough for the chapter number 17. You will review about the use of fund and the source of fund. So I prefer you to review about the bank balance sheet, including the bank's source of fund and the use of fund. Okay. You look at the bank balance sheet, one bank balance sheet. Create a balance sheet for a typical bank showing the main liability and the asset. So you don't need to create a balance sheet. You will go to download the financial report of the bank and 2020, for example, the financial report. 2020 consolidated, right? The balance sheet. And you look at the asset item and the liability item. Okay. So in the asset, we have the like cash and the loans, any investment, and the other activity. On the liability, we have the deposit, like a transaction, a saving, or the term deposit, money market deposit, and the other borrowing, for example. So you select the loan bank, and you can see the details of the asset and liability items. You don't need to create a balance sheet. But remember, when you see the items here, you can group, okay, them into related to the theory. For example, liability, we have the deposit here, okay. In deposit, we have the transaction deposit, any number related to the transaction deposit, saving, time deposit, money market deposit, okay, MMDA. And beside the deposit, we have like a borrowing, any borrowing. And in borrowing, we have the euro dollar borrowing or the domestic one. So categorize the items into the main, right? Main item of liability or the asset. Can you do it? Surely, right? So easily to download the financial report. Very long, right? And details. So look at. You do it by the sound. Okay. And so the bank sources of fund. Okay with that? So I think we can finish the chapter number 17 here. So on the next one, we can do some questions of the chapter number 24. I will leave point counterpoint questions of this chapter to this Friday. Okay. We will do number 24. No. Number 24. It's about security operation. Okay. You see function of security firm. Okay. Now we have, as usual, we have point counterpoint. We have, point counterpoint of this chapter. So reserve it to this Friday. You prepare it at home for me. Okay. Now we do some other questions. Number 3, investment banking services. Underwriting function. In US, we have the financial crisis and we have the failure of the Lehman Brothers. Okay. So you can find out more information about that. Okay. The good case study. We have, what else? Okay, we can have the flows of fund exercise. How security firm facilitate the flows of fund with the Carson company. Okay, so now we have the first one, investment banking services. Question number 3. Question number 3. Again, you can look back. How do security firm facilitate the leverage buyout? Why the security firm better able to raise fund in capital market than the corporation? Okay. So firstly, leverage buyout, LBOs. You can find out the term. Okay, LBOs. We have the term again in the corporate finance subject and I think investment portfolio, LBOs. So firstly, what does it mean by LBO? And how security firm can arrange fund, facilitate the fund for LBO? Sorry. Give me 1 minute. Okay, so firstly, LBO, and the second question about the merger acquisition. You know LBO, leverage buyout. It kind of new term, right? But actually, it's familiar, very popular. So leverage buyout is a kind of a kind of the merger acquisition with the financial leverage. Here, leverage and buyout. It is kinds of M&A with the leverage, with the financial leverage. And normally leverage buyout will be used for a higher value merger acquisition. Okay. So any idea? You can find out very quickly, right? Anyone find out the term IPO? IPO? Yep, leverage buyout. It's a leverage buyout. So firstly, you find out the term LBOs, and then you see the role of security firm in leverage buyout. So leverage buyout is a kind of the merger acquisition with the leverage, M&A with leverage. It's better for firm, right, to settle, to do or undertake the M&A in the leverage buyout because they can use the leverage rather than they roll the capital. Easier to settle the M&A, right? So the funding to settle the M&A, it comes from the leverage. We buy out the company by the leverage to cover the all expenses of the asset of the company. Okay, they don't need to use its own capital. They can use the leverage. So use the leverage to settle the merger acquisition, and the leverage normally be based on a bond. Okay, bond. So more details. Have to evaluate leverage buyout. Security firm can have to assess the value of synergy and find appropriate plan to leverage. Okay, so leverage buyout is equivalent to the merger acquisition. In order to settle the merger acquisition with leverage, financial leverage, and financial leverage in terms of, like, let's say the bonds. Okay, bonds. So the role of the security firms, they can assess the value of synergy, appropriate plan to leverage. Good. Plan to leverage to accept assess the value of the synergy. Okay, so firm here, security firm here. First one, they assess. Accept here is no. Access here. Access the appropriate level of the firm value. The firm value. Assess the firm value first. Of course, the synergy. Yep, synergy. If the two firms are together, we have the synergy effect. Synergy effect. Any gains here? We find out the gains. Find the appropriate plan to leverage. Okay. Arrange the financing in order to undertake the merger acquisition, arrange financing for acquisition. So we have the example in the slide, right? The security firm may offer the loan financing. They provide the bridge loans. They connect, okay, they match the borrower with the other creditor, or the security firm may provide the equity financing, their own capital on that. So loans, bridge loans to other creditor, or equity financing by themselves. Okay, the arrange the financing structure, right? Financing structure. And also they provide the advice, additional advice, if necessary. After the merger acquisition, whether we have the restructure in the human resource management, okay, about the other aspect, corporate governance, for example, okay, it's more about the investment banking services, okay, investment banking services. Arrange a fund to undertake the transactions, provide the fund if necessary, services, advisory services, okay? Real complicated financial transaction. Of course, they receive the fee here. So they receive the fee here and the interest if they provide the loans here. And equity financing, return and the interest, okay, fees and income. Of course, they are better, right? They are better than able to raise funds in capital markets than the corporation. Because many acquisitions require outside financing, okay, external financing. So security firm have the ability to raise fund than the acquiring firm. So increase the success of the merger acquisition transaction. Okay. Yeah. I prefer you to review the underwriting function. Underwriting function. We have very details in the slide about the underwriting, the step involved in underwriting. The underwriting for stock or for the bond issue, for new stock offering and the new bond or new debt offering. And we need to compare the underwriting with the firm commitment and with the best efforts agreement. Okay. We compare between the firm commitment and the best effort agreement. Yeah. You connect the 5 and 6 together. And 3 here about the investment banking services. Okay, we come to the stock price security topic because of reason increase interest rate. You have very interesting, okay, the type of exercise here. It's about the interpreting the financial news. Maybe try it, right? Chaos in security market can be good for some security firm. Maybe. So at home, we try to find out the related information about this new for me, chaos in security market. Good for some security firm. What does it mean? And how do you interpret? Okay. Now, we continue with the 1 or 2 questions in the flows of fund exercise. Flows of fund exercise. How security firms facilitate the flows of funds. Recall that Carson Company had periodically borrowed funds, but contemplate a stock or bond offering so that it can expand by acquiring some other businesses. It had contacted Kelly Investment Company, a security firm. Question A. Explain how Kelly Investment Company can serve Carson and how it will serve other clients as well when it serves Carson. Services, for example. Also explain how the Carson Company can serve Kelly Investment Company. So we have the contract or the deal between the security firms and the Carson Company. How the security firm can serve the customer and vice versa. Okay, you can base on the services, main services, or the role of the investment banking or security firm. We have the hinting is a facilitate the flows of fund. Okay, facilitate the flows of fund. We have the situation, the Carson Company has the periodically borrow, but it contemplating a stock or bond offering so that it can expand by acquiring some other businesses. Like it kind of demand from the Carson Company. Needs, okay? I need more funding. Long-term funding, stock, or bond offering. The purpose is expands the business. Do merger acquisition, for example. So any services can Kelly Investment Company offer to Carson. You have the needs, you have the demands already. So now you work out it into the services offer. So what kind of services here? Kelly Investment offer to Carson. You have very active here. So can I ask one more? Chien, what do you have? What do you think? Services that the security firm offer to Carson. Chien, do you have any idea? You know needs and demand already, right? Chien, are you here? Not here. Chien, what do you think? No idea at all. You want to, okay, check the time then. Okay. Remind me at the end of the class. No other idea. You're very active here. Very active. But what about the others? Let me call another one. Anh Tú. Có hai bạn đúng không? Nguyễn Anh Tú với Vũ Anh Tú. Okay. So what do you think? how the security firm served the cousin and how the cousin served the security firm.
I'm not clear about this problem. Can you
It's a
explain
kind
me?
of situations, right?
Yeah.
Yeah. You have the demands, you have the needs from the cousin company. You know the needs here. They have the borrowing, you have the long-term funding, borrow funds, but still seeking for a stock or bond offering, a new offering, maybe the stock or the bond, in order to meet the capital needs or to expand the business, expand the acquiring some business. Now they want to expand the business. They want to buy another company. They need the funds in long term. So they prefer a stock or bond offering in long term. So they contact with the security firm and show them the needs or the demand. So now, can you put it in the details? Let's say you put it in the services. You call it in the detail by offering the services. Okay?
Yes.
You have the needs. I need a long-term funding to buy another company, to do the merger acquisition. So what can you serve me? What can you provide me? Okay.
So serve by issuing stock or bonds.
Mm-hmm. It is a security firm.
Yes.
Cousin want to obtain the fund to support the expansion. So Kelly offer
By stock or bonds.
they
So
offer stock and bond.
I think stocks.
No, the security firm will not offer the stock and bond, but they offer the services to facilitate the stock and bond issue. Remember that? The security firm will facilitate the new stock and bond offering. They act as an underwriter or they offer underwriting activity services to support, to facilitate the stock and bond issue. Okay? So here, they can underwrite the stock, okay? Underwrite the stock or bond issue. You know that? Facilitate, originate, underwriting, advertising, distribute stock and bond issue. Bảo lãnh phát hành nhé. Đấy, chứ họ không phải là tôi mua đâu, đúng không? Anh cần huy động vốn, tôi mua stock and bond, không phải. Tôi hỗ trợ anh, I support you, I assist you in raising fund, in issuing stock and bond from the start to the end. Okay? Clear with that, Vũ?
Yes.
I support you. I support you in obtaining fund. I will not give you the fund. Okay? So underwrite the stock and bond issue. Okay. So the company can obtain the fund to support expansion. Underwrite and then the pledge the security or distribute the security to investor. Okay, remember public offering or private placement. Okay, you remember the private placement. They distribute the new shares or new bond, normally new bond, to selected institutional investor rather than the public investor. Okay. About the merger acquisition here, because you remember the cousin want to expand by acquiring some other business. So the two demands here needs the funds for merger acquisition. Okay. So here, obtaining the funding here, and merger acquisition. Okay, facilitate the funding and merger acquisition. So Kelly Investment Company can offer the services in the merger acquisition. They give the advice about acquisition by doing valuation of the target company, negotiating with the company to make a deal, right? So support in merger acquisition as well. Not only about the obtain financing, but also the M&A services. So many, right, services may offer to Carson company. You put it in detail, right? And you explain it very short, quickly, briefly, okay? Trong câu này mọi người sẽ phải list out ra được những cái main activity, main services, and briefly explain it, okay? The two main types of services. First one about the obtain funding, like underwriting, place the issue to investor, okay? Earn the fees here, or the premium. Also, the security firm may offer the services about the M&A. Do valuation of the target firm, calculating the synergy, support the acquiring firm, Carson company, in negotiating with the target company, okay, to finalize the deal or to do a transaction, okay? So key point. And how the Carson company can serve the security firm here. Kelly serve the Carson to earn the fees or income. How Carson serve Kelly company, Kelly Investment. Đấy là bạn gì? Anh Tú, Nguyễn Anh Tú đúng không? Bây giờ là bạn Vũ Anh Tú xem nào.
Dạ.
How Carson company serve Kelly Investment Company? Second questions. We already discussed about how the security firm provide the services to the Carson. Okay. In return, how Carson company can serve Kelly Investment Company in return.
The Carson company can serve the Kelly Investment Company. Carson give the Kelly Investment Company their business, and Kelly Investment and Kelly Investment have the obligation to serve the investor.
Of course, right? Very simple. Now let's think about it. Kelly offers services to the Carson, and in return, the Carson pay fees, pay money for Kelly. Is that true?
Yes.
Pay the fee, pay the premium, and of course the Carson need Kelly company, because Carson, they will specialize on the core business like manufacturing or the main business rather than the very specialized services, complicated services like a merger acquisition or the fundraising. Is that true?
Yes.
So it's a kind of the two-way, right? Win-win solution. Carson need Kelly to undertake very complicated activity, high finance, requires expertise and knowledge. And Carson cannot, cannot perform this or the undertake the M&A without the Kelly. They rely on investment bank to perform the services. That's all. Yeah.
Yes.
They pay fee. And Kelly, they offer the services. That's all. Very simple, right? So Carson pay Kelly fee for any services offer. And you know that the Carson specialize on the core business. They are unable to undertake or perform these specialized services, okay, such as the investment banking services. That's all. Everyone clear about that? Okay, thank you. Reassess of firm capital should increase. Yeah. I think it's not difficult for you, and for the exam, for example, I may ask you very simple question like that. Yeah. So it is a deal, right, between the two parties. Okay, so at home, point counterpoint question of 24, and we continue with the question B, C, and D. Okay, of the flows of fund exercise. So at home, spend time for point counterpoint. Point counterpoint already, right? I know. Point counterpoint, flows of fund exercise, B, C, and D. That's all. Okay with that? Okay, so we can stop right now. Okay, check right immediately. Already checked out. Questions so far? You don't have questions, so we can stop here. It takes times for the recording, and then I upload it. Double check on the Google Classroom, the link for the previous recording, and double check whether it works or not on the YouTube. Okay. So it takes me the time, right, to save the recording, send the recording to my email, and take time to upload the video on the YouTube. Okay. So hope that I can upload the recording tomorrow. Hope that. Okay, but I sent you the OneNote immediately. Already, right? Chapter 24. Again, we have. I may replace it to remove it. I got 24 already. Okay with that? Okay. So you can leave the meeting right now. Bye bye everyone. See you Friday.
Em thưa cô ạ,
Ơi. Stop it.
em thưa cô là
Chào cô
về cái
Tiểu.
điểm danh buổi 1 ạ.
Chào cô Tiểu. Cô tắt cái recording.
Vâng ạ.